Hello, this is Stevie VIX broadcasting from Connecticut, and today I want to talk about why the VIX is so high. I see a lot of people online being concerned with the level of the VIX. They see the market going up, the economy doing better, COVID going down, and they wonder why the VIX remains so high. So I want to clear up, the situation for people. Well, first of all, the earnings of the market, the earnings by the S&P 500 companies have gone down a lot. They're like down 35%. I know it's supposed to be a mulligan year, but the earnings are down, and that means that the multiples are up. If you look at this chart here that I have, multiples are at 43 right now. Earnings have gone down to 91 from about 140 last year, and multiples have gone up. So the entire rally we have seen this year is all one gigantic multiple expansion, and the multiples are at the highest level we have seen since 2000, so 40, 42. So if you remember, if you go back to the dot-com area, dot-com years, we had very high multiples then as well. But if you remember, also the VIX was very high. The VIX routinely averaged over 20 for about 6 years. So it's not unusual when you have high multiples to have high volatility, simply because when multiples are high, a lot of people say, well, look, the stock is overpriced, I want to sell it, right? And they sell it. Portfolio managers look at that. They know that behavior, so they want to hedge for that eventuality, and that's exactly what is happening today. If you look at the positioning in VIX futures, we have some of the highest net long exposure to VIX futures by professional asset managers. So these two charts, they're taken from the commitments of traders reports for the VIX futures. So if you look at here, there is like over 5 billion in long exposure to VIX futures. You look at the net, which is the purple line, it's 2.5 billion. That's one of the highest we have ever seen. On the other hand, you have the hedge funds, which are balls deep short the VIX futures, right? So the hedge funds are very short, and the portfolio manager, the institutions and the asset managers are very long VIX futures. So we have kind of a big battle here. But the VIX is high not because I'm buying it. I'm bearish. It's not because I'm bearish and I'm buying it. I'm nobody. The VIX is high is because the institutional are buying it. What the institutions are doing, they're long stocks, and they're also long the VIX. They're hedged out because the valuations are high, right? That's what's going on here, and so there's nothing unusual from what we see here. If anything, people really should be concerned that there is such record high net short exposures in the VIX futures by hedge funds. You saw what happened with GameStop and how the hedge funds got trapped. Who knows? Maybe that can happen to the VIX as well. Okay, I'm out. Bye.